Hey everyone, thanks for joining me today. It's Stefan Angelini. I'm finally back after a crazy May and June where we helped a heap of clients do super contributions, pension payments, withdrawal and recontributions. We are back doing our monthly updates. So thanks for bearing with me. What we're going to talk about today is we're going to look at what's been happening around the world. Basically, we're going to look at interest rate expectations, given interest rates have been going so high. We're going to look at Robodebt and the issues this Robodebt has had on people, Centrelink recipients. We're going to talk about China and the Chinese inflation and actually their deflation, how it's different to the rest of the world. We're going to talk about Threads and Facebook's new release of Threads and how it's impacting on Twitter. And maybe it's just a really good time for Elon Musk and Mark Zuckerberg to have their UFC fight. And finally, we're going to talk about a little bit about the AI boom and the main companies it is affecting. Just remember that this is just general information. Please don't consider it as personal advice. If you want any personal advice on your specific investments or investment portfolio, please go and consult your licensed financial advisor. Now, let's get into a little bit. Going through interest rates, Australia is still going strong and kicking higher. Where is it going to go and when is it going to stop? A lot of economists were saying it was meant to stop in March, April, and it hasn't stopped yet. But Grant Samuel Funds Management, who's an investment strategist, they've got an investment strategist, Stephen Miller, has said he expects at least another 0.25% raise next month in July. And we'll see what happens after that. So that is not great for people with debt. So we do expect it to go a little bit higher, maybe just one more, and then we'll see what happens. Obviously, the RBA didn't do anything just recently, but so the next meeting is on the 1st of August. And what's really crucial about this meeting is the CPI, so the Consumer Price Index release on the 26th of July. So what that reveals around inflation pressures and everything like that. But basically in Australia, we haven't had the workforce decrease, businesses aren't hurting, people haven't stopped spending money. So that means that, well, it might make the RBA keep increasing rates, unfortunately. So something to watch there. Next, we're going to go into Robodebt. So if you haven't heard of Robodebt, basically what happened a little while ago under Scott Morrison, the government allowed a robotic system to determine who has been overpaid in their Centrelink. And there was a royal commission into it, basically. So the commission heard of the ill-conceived, bumbling attempt to automate welfare debt recovery systems in the hope that the government would get back $1.7 billion in back payments to people who had allegedly underreported their income to Centrelink. So this went over 4 years. That's when it was unleashed, and there was a freight train of misery. So a lot of people were told to pay money back they didn't have. They thought they were overpaid. They haven't been. I know a lot of people this happened to. And finally, the Royal Commission has said, this is not good. What's happened is not good. It was a report was released on the 7th of July. So if you have an outstanding debt with Centrelink sitting there, just watch it and talk to Centrelink about it to see what the outcomes will be. Next, we're going to turn our focus to China. China is the world's second largest economy, and it's growing and growing and growing. Now, if you remember, China had probably one of the world's longest lockdowns, second to Melbourne, where they kept everyone indoors while everyone else was starting to get outdoors. And now China has a serious inflation crisis because they don't have any. Everyone in our parts of the world have high inflation, which means interest rates are increasing, but China doesn't have any inflation. So basically what's happened is people have stopped spending money. No one's buying property because they got a massive property collapse. No one's spending money because they're scared of more lockdowns in the future. So they're really facing a prospect of deflation where things are going to go down in price, which is going to impact on their economy. And, we are just seeing complete opposite ends of the scale. Their recent inflation data has indicated that, inflation is going back in a lot of sectors. And that means there's probably going to be a call for the Chinese government to stimulate the economy. Now, but the government has been saying this for a long time, that they're going to pump money into the economy, get people back working again, get people spending money again, and therefore get inflation back up. But the government hasn't done it. Why hasn't the government done it? One massive problem that, yes, they are putting false hopes out there, but their property crisis has caused the government to have a whole lot less revenue coming in. And that means a whole lot less money to spend. So with land sales down about 15%, in 2022, that's a huge hit to their source of revenue, which would be similar to our state revenue office or stamp duty, which is one of the biggest here in Australia, probably number 2 revenue maker in Australia. But what that means and how does that flow through is that if China's not spending money, the government's not spending money, the Chinese people aren't spending money, there's no inflation, then what's going to happen to Australian investors in companies like BHP, Rio Tinto, and Fortescue Metals, who rely so heavily on the Chinese economy and the price of iron ore? It's going to be a real issue to watch for these super heavyweights in Australia, which will impact on both our index and these big companies if you're invested in them. So that's that about China and how it flows onto the rest of the world. But let's hope the Chinese government does spending money. We think they will. We think they'll start spending more money and get that real economy pumping again. Then we'll turn back to the US. I'm going to look at Meta. Meta is Facebook, if you don't know. Facebook owned Instagram. And a competitor to Facebook is Twitter. Twitter was bought by Elon Musk. And Facebook has just released a competitor to Twitter, calling it Threads. And they've got over 2 million signups in 48 hours, which is huge. So they've mainly pushed everything through Instagram and allowed people to sign up nice and easily. But Facebook is known for going in and ripping other companies off. Hence, there's some legal actions coming up. And there's a lot of worries around this Facebook or Meta being a big superpower, especially in the social media space, and not really having any competitors because of their ability to just push people out. Instagram did it firstly with, who was the first one? Snapchat. And then they started doing it with their Reels to battle TikTok. And now they've released another thread, it's called Threads, to battle Twitter. So people don't go back onto Twitter. So there's going to be a few issues around that. So it probably is a good time to see Elon Musk and Mark Zuckerberg fight in the octagon because they have a fair bit to take out on each other now that Elon Musk owns all of Twitter. Finally, if you haven't heard of artificial intelligence and what it's doing to the world, it is taking the world by storm. And there's 7 particular companies in the USA. The top 7 companies have really had a massive kick in the US market. So we call them the Magnificent 7 stocks. And the value of these companies is $11 trillion. That's nearly 3 times Germany's GDP, of gross domestic product, what they produce each year. So huge new area. NVIDIA has probably been the biggest beneficiary of the AI boom, given they're largely involved in it. But there's whole lot of other companies such as Facebook, Amazon, Microsoft have all been doing great things with AI. So those big tech companies have been going stronger and stronger and stronger because this is the new world. Finally, that's it from me. I'm going to release another special episode just on AI to give you a bit of an update on what AI is and how it's affecting markets and what you should be looking out for if you invest into it and what we're looking out for our clients. So that's a wrap. Thank you all for joining me, and go off, invest safely. If you've got any questions, reach out to hello@angeladvisory.com.au. Thank you very much for listening. Appreciate your time. See ya.